The first reason generally is we're seen as the region that's still got some level of distress. The property cycle is very attractive, but also we have very tax and transparent legal systems. And I think that's very, very appealing, whereas we're seeing a lot of the Chinese and Taiwanese insurance companies finding it difficult to invest in the States for their tax reasons for overseas investors. But also, as I said, the Americas has recovered quicker than Europe. We still have a level of distress, and I think our property cycle is really, really appealing to a lot of people. But also the liquidity of the European market is very, very attractive to a lot of investors. And as I said, when you compare the Americas that has recovered quicker, Asia that's actually slowing down their market, and Australia being a smaller market, I think places like London is very, very appealing to these investors. London is always seen as the main entry point, and again, you know, several reasons. It's our transparency, it's our openness to sell to a lot of overseas investors, but you know, the economy compared to the rest of Europe is improving. There are pockets in Europe, but there is the risk that Europe as a general will go into a deflationary risk period like we've seen in Japan, and I think there's some of the geopolitical risks, as I call them, the Ukraine crisis, the oil crisis, is affecting the economies of Europe more than the UK. As I said, there are pockets, we're seeing a lot of capital move into Spain, we're seeing pockets of capital going into Paris only rather than France, and also Germany is attracting a lot. But London is really the first port of call for a lot of investors, and when you come to Hong Kong, we do see a lot more of those investors really targeting London. One of the latest trends we're seeing is actually people coming back to those safe havens as the market matures, and we're starting to see people take a little less risk and actually buy core plus product in the core locations in London. London is a very, very fully priced, competitive market. It does attract a lot of capital from North America. It does attract capital from the Middle East. It does attract capital from Australia as well as Asia. But we're seeing in London, the Asian capital is really, really dominating London in particular. I think over 60% of transactions are done by Asian capital, whether that's South Korean insurance companies. We're starting to see a lot of Chinese insurance companies with the deregulation. We're starting to see the Taiwanese insurance companies buying, as well as we've seen people like Nanfeng from Hong Kong and YP Realty recently buy in London. So London continues to be dominated by Asian capital. I think London, as I said, is so competitive, and there's a lot of people searching for yield and returns, and it's getting harder and harder to get that in London. The regional markets, as the UK economy improves, are looking slightly more appealing. However, the fundamentals aren't as strong as London. So I think if you're going to go to those markets, there is good opportunity there. But I think it'd be very wise to invest with a local partner who knows those markets. But as I say, we've just seen HSBC relocate and take a large letting in Birmingham, for example. So these markets, you know, they've been through a lot of hostility over the last 7 years. They are just starting to turn the corner, and I think there's some good opportunities there.